morning, viewers, and welcome to another new week and another edition of the Market Review, where we bring you developments in the financial and capital market as it relates to the economy. Today, we're looking at regulations and capital market development in Nigeria as we count down to Nigeria at 60. And with me to lead this conversation is Mr. Johnson Chukwu, Group Managing Director, Cowry Asset Management, and a notable market analyst and expert. Nice to have you on the show, and good morning.
Good morning, Ottoabasi, and thank you for having me.
Yes. So we're talking capital market evolution and development and the role of the regulators. First, what comes to mind, Mr. Johnson Chukwu, is that groundbreaking capital market master plan, 2015 to 2025. Already, we have hit over 5 years on that plan. It was designed to develop a viable, liquid, and accessible market ecosystem in the country, and it's divided into the capital market, the non-interest market, and capital market literacy. First, give us your thoughts around this master plan in terms of re-energizing our markets and repositioning it to be globally competitive. And it's taking after the Malaysia market, one of the templates. The Malaysia market today, the market capitalization is over $300 billion. Nigeria is still way behind that. We're on course to hit that level, but for now, we're still not there. So what comes to mind when you look at this plan and how it has transformed the market and the prospects ahead?
Thank you once again. I think the Nigerian Capital Market Master Plan is a well thought out, very well articulated plan that is supposed to jumpstart or leapfrog the Nigerian capital market, just like I said, in tandem with what has happened in Malaysia. And if you look at the Nigerian capital market vis-a-vis the size of the economy or the GDP, you realize that comparatively to when you compare it to what you have in other countries, other emerging economies, you realize our market is infinitesimally small as a percentage of GDP compared to what you have in Malaysia. Nigeria, as at the time that capital market master plan was developed, Nigerian capital market as a percentage of the GDP was just about 16%. Compare that to the likes of South Africa, that has over 200% of the GDP in South Africa. Malaysia had about over close to 200%. You look at the countries like US, UK, Brazil, and virtually all countries that have developed capital market have capital market that are at least multiples of their GDP. But Nigeria is a small fraction of our GDP. And I think that capital market master plan was designed to leapfrog the capital market, and not just to leapfrog the capital market, align it with the development of the economy, and also to bring the critical sectors of the economy to the market. Sectors like agriculture sector, sectors like the infrastructure sector, solid mineral sector that we are supposed to have been brought into the capital market, and to expand the capital market. As if you look at it today, agriculture sector accounts for more than 23% of the GDP, but only 2 companies in that sector are listed. As at the time that capital market master plan was developed, the banking industry alone accounted for about 60% of the GDP of the capital market capitalization. But in reality, the banking sector, the financial services sector, account for just about 4% of the GDP. So you have this misalignment between the capital market and the structure of the economy. And that's one of those things that master plan was set out to correct.
So very, very rightly so, you talked about the fact that when you look at markets like Malaysia, it's over like 100 or 200% of GDP. South Africa, over 100% of GDP. But we are not even more than 30 or 40% of GDP when it comes to our market. That means that there's a huge work to be done, Mr. Johnson Chukwu, as a player in the industry. When you segment the various committees and the work they've done so far, do you think we're really unlocking the opportunities to deepen our markets to be, in terms of size, something that can be reflective of the economy?
What I would say with respect to your question is that we are making some progress, but just like the master plan stated, you can't have a capital market master plan that is diverse from the general economy. Between the time the capital market master plan was developed to run from 2015 to 2025, the economy has gone through turns and twists, which have hindered further development of the capital market, though some segments of development are actually taking place. If you look at the performance of the economy over that period, you realize that the next year, the year immediately after the capital market master plan started, the economy went into a recession and only recovered marginally in 2017 by growing at about 0.82%. Even the growth at 2.2%. So in reality, the economy has been on this slow recovery path, and that have hindered part of the development of the capital market master plan. Irrespective of that, we've seen some development. We've seen the mutualization has taken place. We've seen listing of mutual ethical instruments like Sukuk bond and similar instruments in the market. We've seen an improvement in the level of awareness in the market. We've seen, in terms of traction, the three government segments of that market development are taking place, but maybe not at the speed that the initiators and developers of that master plan had planned or had thought. We've seen, like I said, we've seen improvement in terms of, today we have two agricultural companies listed, Okumu Oil and Presco. We've not seen any solid mineral company listed so far. But we've seen a diversification in terms of market capitalization, segments that contribute to the market capitalization. The banking industry no longer account for about 60% of that market capitalization. We've seen the cement sub-segment accounting for a reasonable percentage of the market. We've seen the telecommunication sector that was absent at the time the market master plan was developed. We've seen the strong presence in that telecommunication sector. So we've seen expansion in terms of the structure of the market, in terms of the sector that contribute, which means you have a broader market. Like I also said, we've seen introduction of mutual funds. We've seen introduction of ethical funds, Islamic funds in the market, and there's some reasonable level of improvement in terms of market awareness, which are the three segments that that master plan went out to achieve.
And so, still speaking around this capital master plan and listings, there has been these discussions around the need for enabling environments to ensure that we can get on board more companies. Just mentioned that Soil Minerals doesn't have a company listed, and we've seen some reforms already in the works around solid minerals and how mining companies can begin to invest in the country and most hopefully list in the market. And in the oil and gas sector, we've seen some companies, but they are the big ones like the State Oil Company and Nigerian National Petroleum Corporation, and ones like Nigerian Liquefied Natural Gas companies. Such companies having some segments listed to begin to privatize to the market has become something that has been a key discussion points from the market. I remember the previous Director General of the Bureau of Public Enterprise, the dealing member, said he was going to push that. The BP currently under Mr. Alex Oko is also working around that. How important are those steps, reforms, bringing in companies, state-owned companies, to list on the market that can also boost its capitalization? When you look at the example of Saudi Aramco, when it was listed on the Tadawul, Saudi exchange, it boosted the exchange's capitalization, which is now way over $2 trillion.
Well, I think the idea of having the state-owned enterprises listed have been in the offing for quite some time. If you look at the original petroleum industry bill, it had made provision for listing of Nigerian National Petroleum Corporation. It actually made provision for incorporated joint ventures, so that the joint venture between NNPC and the international oil companies will be listed on the Nigerian Stock Exchange. There was also provision for listing of the power distribution companies and power generation companies in the Power Reform Act, in Power Industry Reform Act, so that they will also add to the capitalization of the market and as well as give opportunity for Nigerians to invest in those companies. Then I know, I just saw this morning that the president has submitted the revised petroleum industry bill to the National Assembly, and that will change the nomenclature of NNPC. Although what I saw in the papers indicated that the NNPC will still be reincorporated as a limited liability company, private limited liability company, but hopefully that incorporation will also push the government, now the government is pulling out of subsidizing the industry. So it will also compel them to access funding from the capital market for their developmental objectives. So I think the approval or the enactment of the petroleum industry bill will be a good step towards having NNPC be in position to get listed. But beyond that, I think we should also continue to drive the listing of the critical sector of the economy. To do that, we need to push for formalization of the sectors. As you know, some of the constraints that have made our capital market not to be representative of our GDP is that a lot of the Nigerian businesses are still informal in informal structures. So you find out that most agricultural producers are small-scale holder units. You don't have the structures to come to the market and get listed. So we should push for formalization of the economy. Today we have the 2 telcos or 3 telcos listed because 2 telcos listed because they are structured and formalized sectors. The solid mineral sector is also the problem you have because you have a lot of formalization. You have artisans that are mining solid minerals and therefore not in position to come to the market. So I think the government should push for some stronger level of formalization by encouraging these operators to form themselves into corporate entities. I hope that the newcomer will help some to push for this level of formalization that we require to create the structures that will enable these companies to come to the market.
Yeah, as you talked about the CAMA, the Company Alliance Matters Act, that was a landmark after 30 years, since 1990. It was finally reviewed. But let's look at another act, which is the Investment Securities Act, ISA, which is also a key legislation that guides the activities of the market. Will you describe it as comprehensive and holistic enough to address our current realities in the market, particularly with the disruptions that came through COVID-19 pandemic?
Yes, I would think when you say comprehensive, well, no law can be absolutely comprehensive, but I think it's a long way, it's a big improvement over what we had before, and the fact that we took cognizance of some of the changes in the environment occasioned by the dynamism created by COVID and evolution of the telecommunications industry. We've seen provisions to allow for some level of interaction interface using modern telecommunication services, unlike when you had to rely on the brick and mortar approach to the management of investment issues. So we've seen recognition of electronic signatures and all those things. So for me, the key thing about legislation, it has to be dynamic. It has to be something that make provision for improvement as the society evolves. Because the society itself is dynamic. I recall today my 6-year-old daughter went to school with a laptop, and I started laughing. When my asked me why I was laughing, I said, look, during my time at her age, there was nothing called laptop. It wasn't existing on Earth. So but that also shows me that. But today, 6-year-old child is asked to bring a laptop to school, just to show you how the world has evolved. So in making legislation, in creating any piece of law, you have to be forward-looking, which is what I think the IST did, to be forward-looking. But no law can be comprehensive as to begin to hazard what will happen in the next couple of years.
Yeah, and just a tranche of that, the IST, Investment Securities Tribunal, has been reconstituted. It has its own issues for over 3-4 years now, and it's very important, Mr. Chukwu, that IST is functional so they can bring confidence to the market. Looking at the reconstitution, what would you expect to see happen more now from the IST?
Well, I think they have a full complement of membership now. I believe they will have a backlog of cases that need to be tried and resolved. So we demand a lot from them. Some of the challenge they had was the membership was not full. All the members was not fully constituted, and now we have a chairman. We have a fully constituted IST, Investment and Securities Tribunal. We also had issues that had to do with some people who were challenging the authority of the tribunal in previous instances, and they also challenging the independence, or call it the non-biasness of members of that tribunal. I think with the reconstitution of the membership of the tribunal, those issues will have been put to rest. The challenge for them is that they must continue to live above board. They mustn't allow any opportunity for anybody to impinge on their integrity. And they also have to be to ensure that justice is dispensed quickly. Because like you said, they said in law that justice denied, justice delayed is justice denied. I know their work is well cut out for them. They need to move quickly to resolve many of those issues. And in resolving the issues, I'm always an advocate that, look, let's always have the market in mind. Let's always have in mind orderliness in the market, so that we don't throw away the baby with the bathwater.
Market development should be at the center of legislations and even adjudications. But let's look at that aspect of regulation. You talked about your 60-year-old daughter going with a laptop. Very interesting. Shows how technology is really changing a lot of things. And recently, the Securities Exchange Commission brought out guidelines for digital assets, that's digital asset transactions, which of course, you know that the millennials and the Gen Zs are so involved in when you have to do with cryptos, Bitcoins, and other those segments. But stakeholders are still asking for stakeholders in fora saying we need more clarity on your guidelines for digital assets.
I think what stakeholders is that if you look at that regulation by SEC, it actually focuses on homegrown digital assets. As we know today, I'm not aware of an actively traded homegrown digital assets. So the challenge that we need to address how to, in terms of custodianship, in terms of management, in terms of regulation of foreign developed, foreign evolved digital assets that are traded mostly by Nigerians, where the jurisdiction of it, speak to a lot of people who are trading issued instrument, but the regulation was focused on assets that were developed locally in the country, and where you have no jurisdiction to whatsoever to interface or interact with the issuers or cannot regulate.
And I think there was, prior to now, there was some developments around the IOSCO, the International Organization of Securities Commissions, IOSCO, looking at how they can coordinate activities amongst themselves, all the securities commissions across the globe. They can work together to bring out those cross-border regulatory will really help the IOSCO steps now they're exploring that cross-border regulation.
Yes, it could. It could help to some extent. But as it stands today, Nigeria is a active member of IOSCO. The key thing is that each of these countries must also have a regulation around digital assets before a commission can be of any help to any of the member nations or member securities bodies. If the U.S. government, for instance, if the U.S. SEC does not regulate digital assets, the membership of that organization will not in any way help Nigeria to interfere with any failure that happened from an asset to the U.S.
Yeah. I know that they're really taking a lot of caution around it. Even global finance ministers are taking a lot of caution around these issues, but it's very important that it's taken note of because of the impact it's already having with the millennial population and Gen Zs. But Mr. Johnson Chukwu, as we look at Nigeria's 60 years, look at our economy and capital market, one major challenge has been low investor education and participation. I dare say that our market participation level in terms of population is around 4 to 5%, which is very low. How can regulators like SEC and SROs like NSC, FMDQ, NSD, and the rest reimagine investor education that can take our participation level to at least 35% by 2023?
I think we have to look at the master plan, the capital market master plan agreement. If you see the third segment of that master plan is to create awareness and improve on market participation or investor participation in the market. One of which is to continue to expand that market awareness by speaking with engaging students bodies, engaging market traders, engaging different segments of trade groups and blocks of interest. And like I did mention now, today we are looking at a high level of advancement in telecommunication technology. I think one of the methods to adopt is to catch them young. If you expose people at a very young age to to the capital market, which I think technologies are actually helping us to do. Today in Cowry, customers can actually trade without knowing where we are, where our office is, with their telephones or their laptops or their iPads. They can do their trade straight where this is straight through settlement today, and the credit or debit goes straight to the account without even being warehoused in our position. So what we need to do is encourage market operators as well to develop and deploy virtual trading platforms and give access, because you have to be targeting at the younger generation of Nigerians, which accounts for more than 40% of the population. If you look at people below the age of 24, they account for more than about 46% of the population. So if you get them to embrace technology and market awareness, today campaigns to create market awareness should include things like Instagram, Twitter, and all those social media platforms, because that's where the young people are. And they are the ones that are also easy adopters of changes of technology. They are also the people who are ready to take risk. There are people trading in cryptocurrency and virtual assets. So I think the strategy to reach out to the different market groups that are not yet in the market should now be more of virtual platforms than the original arrangement where you need to go and do presentations to groups of people. If we deploy virtual platforms, we're likely going to get a lot more awareness, a lot more participants. And again, another factor you have to look at it. The secondary market viability is also drives market participation. We've seen market index in a number of years closing negative. That does not encourage a lot of participation. Nobody wants to come to the market and lose money. So as market recover and market performance stabilize, you're going to see more people show interest in the market. If you cast your mind back to the post banking industry consolidation, you saw a lot of virtually everybody, including cobblers, medicine people were interested in the market. But when many of them lost money, they all
2008, 2009.
Yes. So if the market is strong and we're seeing a strong market recovery and people are making money, it also encourages people to come back to the market.
Yeah. And then looking at policies, for the last 6 decades of Nigeria's existence, one of the major policies that has impacted the capital market too is the foreign exchange management strategy. We've had so many suggestions, and even from international multilateral finance institutions. Mr. Johnson Chukwu, based on your experience, what would be the best approach at this point? Is central bank going the right direction?
Well, I think the investment community, local and foreign, are actually pushing for harmonization of exchange rates, the multiple exchange rates. That will eliminate some level of uncertainty, eliminate arbitrage opportunities that are available in the market, and encourage some high level of transparency. Foreign investors want liquidity in the FX market because they want to exit whenever they want to be able to convert their proceeds into foreign currency whenever they exit. When you have multiple markets that have constrained liquidity in the market, it serves as a disincentive for foreign portfolio investors. And we all know that for you to have a vibrant market, just like the capital market master plan enunciated, it's intended to attract investment from all parts of the globe. So you are not going to limit yourself to your local investment groups. The key thing is to make the Nigerian market attractive to foreign investors as well as local investors. For foreign investors, they must have liquidity in your FX market. There must be some level of certainty as ease of exit. They don't need to go to central bank or anybody to beg to access forex. And harmonization of exchange will go to some extent, go a long way to create that liquidity and eliminate some of those constraining factors that are keeping away foreign investors. So this has been on the table for quite some time. The government, a number of government bodies, including the team empaneled by the president as his economic advisory council, have also been pushing to see harmonization of exchange. We've seen the central bank move the exchange rate twice towards the investor and exporters window rate, and we hope that in the not too distant future, we should have those rates harmonized. That will be a long push to create market acceptance of our capital market investment instruments to foreign portfolio investors.
Okay, and then Mr. Johnson Chukwu, looking at Nigeria in the last 6 decades, looking at regulations and how it has evolved, what are those 1 or 2 things you would like to see happen more that will really make our market competitive, liquid, and accessible, and one that, let's say in the next 3-4 years, we can really compete globally? I mean, once there was a vision of a $1 trillion Nigerian Stock Exchange market. I know that vision is still there, but we're not there yet.
Well, I think one of the things we need to do is create an environment that will encourage listing of more companies on the exchange. Today, we have, I will just mention that the listing of the likes of MTN and Airtel have created a lot of broadness in terms of the market structure. We need to push for the listing of, for instance, the international oil company that operate in the country, because they actually account for a huge volume of transactions, but unfortunately their activities are not trapped within the economy. We need to push for their listing, and to push for the listing of some of these critical segments of the economy, you need to create some incentives. And I've actually advocated that instead of the stick, the carrot should be used more often to bring them into the market. Because they are also burdens, they are also costs associated with listing. And when they look at it, they are not looking for benefits of listing. They don't plan to raise market capital locally. They would not see the motivation to get listed and begin to incur those costs, post-listing costs. So we can create incentive by saying, look, for instance, you have differential or discriminatory dividend tax rate policy for companies that are listed and companies that are not listed. If instead of 10% dividend tax on dividend on listed company on all companies, you have 5% for listed companies and 10% for unlisted companies. Probably the shareholders will push the companies to get listed because they will see the benefit to them, and that will be more compelling than what we have today. There must be some level of incentive we need to create for companies to get listed. I'd also mentioned the need for us to formalize the different segments of our economy. South Africa has a market capitalization of that size because several segments of the South African business are formalized. Look at the Nigerian retail space. You realize that the structured retailers are South Africans, but we have our own retail outlets that are still operating a mom and pop shop without any trade broad ownership structure as to compare for listing. But because these South African simple supermarkets are highly structured, they are able to expand to other parts of Africa. We need to push for formalization of our different segments of our economy. Trade alone accounts for about 16 billion of GDP, 13 to 16 billion of GDP. But you don't have any company that is a trading company currently listed on the exchange, because most of them are highly family businesses without necessary structure to get listed.
Yeah. I mean, very, very insightful nuggets from you, Mr. Johnson Chukwu.
On how we can move our market forward. I mean, this conversation could go on and on, but very rich. But thank you very much for the key summations you made. I mean, we need to have that enabling environment to attract more big listings in the market, and also even the good companies that we're seeing, they should be able to also attract other good potential companies into the market. Like you say, we need to formalize sectors like the retail sector, like trading companies, because we're doing well in terms of contribution to GDP, but it should translate to the market. So in a nutshell, the misalignments in the economy can be addressed in the market if we create an enabling environment, and there's a lot to do from the part of regulators and the market operators to take us to that next level as we mark that diamond jubilee as a nation. So indeed, Nigerian capital market, there's a lot to be done to deepen our penetration of the economy, participation, and wealth creation for all Nigerians. Thank you once again, Mr. Johnson Chukwu, the Group Managing Director, Cowry Asset Management, for these incisive discussions around regulations and capital market development in Nigeria. Hope to have you subsequently to discuss on the markets in the next future editions. Thank you once again.
Thank you for having me.
Yes. And that'll be all for this edition of the Market Review, beginning this brand new week. You can join this conversation tomorrow, 10 a.m., same time, as we discuss around the markets and how it can really boost Nigeria's economy forward. Send your comments or views to news@proshenji.com. What do you have to say about regulations and the capital markets in Nigeria? How can regulations take Nigerian capital market to the next level? We're ready to receive your comments and respond appropriately. Also join our website, www.proshenji.com, to watch our videos, read our news reports and analysis. Till we come your way again, thank you for watching. Have a nice day and stay safe.